Yeah, I see one question here from Supernova. Doesn't Canada have something similar to GAAP reporting? So GAAP being the accounting rule set that the US uses. Canada uses IFRS, so International Financial Reporting Standards. Funny enough, I actually read this book a long time ago called Easy Prey Investing that talked about why Canada's IFRS system was very lacking. And really, it just argued that the US has the best accounting system and Canada's gives a lot of benefit of doubt to management, meaning that management gets a lot of discretion in terms of how they classify different items, which can very greatly impact their earnings, which is important to consider as well as, kind of same thing with investing. It's what makes it complicated is sometimes you have to be skeptical of even the numbers that they give you to say, well, could they have fudged these numbers somehow? Could they have done something that might have altered this a bit? And it's why, having an understanding of all accounting statements, not just the income statement, is important because a lot of the time, an income statement, the shortcomings of the income statement, you might be able to pick up in the balance sheet or the cash flow statement. It's why it's good to have a fully rounded view of things. But that book, Easy Prey Investing, I can't remember the author, but it's by these people who are, forget the term, but basically investigative accountants. So they basically investigate forensic accountants. That's the term. So they investigate fraud through accounting statements. So it's a really interesting book, and they their full-time job is auditing and finding shortcomings and things like that. But the nice thing about the book is they kind of highlighted some, practical things for identifying, not necessarily identifying, but things to look for basically when it comes to researching companies and making sure that they aren't pulling a quick one on you. Because there are companies out there, I don't go into investing assuming that every company's trying to screw me over, but they certainly exist. There are certainly companies out there that are just trying to take investors' money.
And there's super famous cases, right? Like Wirecard in Germany and Enron in the United States. Like all of these companies, I would guess if you're as a fundamental investor, but you don't understand accounting or you don't dig a little deeper and just look at the accounting fundamentals, they look super healthy, no?
Yeah, well, that's exactly it. Is if you take things at face value, they would look very healthy. But then there are checks you can do. You can check their cash flow statement and not just look at the total amounts, but if you go line item by line item, you can dig a bit deeper to understand, okay, why are the figures looking the way they do? And one thing I see a lot, actually, especially with a lot of growth companies, a lot of people don't know how to deal with share-based compensation and things like that, which is basically a company paying employees with its own stock. A lot of people kind of ignore that when analyzing a company, even though that's a huge thing to consider, because when times are like these, when stock prices depress, all of a sudden those employees might be demanding cash payments as opposed to stock options and things like that. Not to mention there's dilution and things. But all to say that if you don't fully understand how to consider share-based compensation, you might look at a cash flow statement and say, hey, this company is doing really well. They're making all this cash. The only reason they're making that cash the way they are, though, might be because they're not paying their employees cash, they're paying them stock options, and it's still something to consider. So there's a lot. I always say that accounting, if I can give casual investors who want to research a stock a tip, I would say take some sort of formal accounting training. It really is important. There's a lot of stuff you can learn at a base level on YouTube. I think there's a lot to be said for taking some sort of formal course that forces you to do examples, to practice, because accounting is there's a reason that an accountant is a full-time position. It's its own language, really, and the language of understanding stocks, really.
Is that even more important than taking a macroeconomics class, then, Richard?
Well, I don't want to insult you. I would say you need to know about both. I would say accounting, I think, requires more of that formal side of it because, like I said, it's kind of like learning math, right? To learn math, you have to do examples. We've all taken math classes where you have to do equations and things like that. That's really the best way you learn math. Accounting is very similar to that. So that's my opinion. I think you would certainly benefit from taking a formal macroeconomics course. And I think that would probably do you better in terms of working through sensationalist stuff because economics, as I'm sure you're aware, is very prone to those types of headlines on YouTube and even articles sometimes, from respected journalists can still be a bit more sensationalist. So there's certainly value there. But all to say that, I think accounting is where I see a lot of people lacking with research anyway. It's not to say it's all that matters. I don't think it is, but it's important.
Yeah, and actually, I think accounting is also super important for economists because some of the most tricky subjects that I talk about on the channel, and also some of the most tricky subjects for that I see where I see investors, go horribly wrong in their economic assessments, are just because they don't understand accounting principles, such as, for example, how private banks create money. That's a very tricky and weird subject to think about. It's very counterintuitive. But if you write it down in balance sheets in accounting, then it makes total sense. And I think it's the same for money printing, or if you want to understand how a central bank actually operates and how it influences the market, then looking at their balance sheet will help you a lot. That will really help you understand economics a lot more. And I'm actually from a school of thought, or not an official one, but that has been stressing that economists should also learn accounting.
That's a good point. And to your point, money creation, it's a ledger entry, right? That's which itself is an accounting term and an accounting concept. So yeah, that's a good point. I hadn't considered that, but it makes a lot of sense.
Yeah, so I actually did a lot of accounting in my early videos. So if you scroll back to my early videos, and you can deal with the horrible quality of the camera and the microphone.
we all have that. We all have that.
Then you'll still find those balance sheets. I stopped it because I think we also discussed this briefly between us, that the sort of lecturing approach works less well on YouTube. People want to be entertained, want to be able to watch it on their phone or not take notes all the time. But if you want to go a bit deeper, I think that's super important. Yeah.
Yeah, and I think some people do a good job with it. But yeah, it would be tough to do a successful YouTube channel if all you did, for example, was accounting videos. It's not to say you can't do it, but it would be tough.